The US-China trade war just hit a critical turning point. On April 9th, President Trump escalated tariffs on Chinese imports to a staggering 125%, triggering immediate retaliation. In response, Beijing raised tariffs on U.S. goods to 84%, up from the previous 34%. But China's next move could be far more dangerous than tariffs. Beijing is now signaling it may sell off a significant portion of its U.S. Treasury bonds. Why does this matter? China holds between $900 billion and $1.1 trillion in U.S. government debt. If they dump even a portion of these assets, it could spike interest rates, crash the bond market, and send shockwaves through the global financial system. Financial markets are already reacting. U.S. bond yields are rising, investor confidence is shaking, and Wall Street is showing signs of panic. The phrase "trade atomic bomb" is trending across media as analysts warn that China's financial retaliation could cripple U.S. borrowing capacity and trigger a recession by 2026. Historically, China has avoided this option, knowing a mass sell-off would hurt both economies. But today's climate is different. Trump's hardline trade policies and talk of new financial sanctions are pushing Beijing to consider its strongest leverage. Beijing has also ordered state banks to reduce dollar purchases and diversify foreign reserves. The digital yuan and regional trade in local currencies are part of China's long-term strategy to reduce dollar dependency, a move that challenges U.S. financial dominance. While some experts argue China wouldn't dare destabilize its own holdings, others say a limited, strategic sell-off may already be underway. British and Asian media report a quiet liquidation of bonds, and the result is clear. Yields are climbing, and the dollar is feeling the heat. This is a dangerous moment. The last time global financial systems faced this kind of tension, we saw the 2008 crisis unfold. Could a tariff war now morph into a financial war? And who would really win? Some in Washington are sounding alarms. Members of Congress have urged the White House to rethink its tariff-first approach. A financial standoff with China could backfire domestically, hurting U.S. consumers, raising borrowing costs, and driving inflation. Yet Trump remains defiant, stating he's waiting for a call from Beijing. China, however, has drawn a clear red line: remove the tariffs or face further retaliation. The world is watching closely. Japan and European nations, who also hold U.S. debt, fear they'll be dragged into a wider bond sell-off. If yields rise too quickly, it could shift global investment flows away from the U.S., a move with long-term consequences. Is this the beginning of a financial showdown between the world's two largest economies? If China goes through with its threat, the U.S. might not be the only one affected. This could reshape the balance of power in global finance. Drop your thoughts in the comments, and don't forget like and subscribe for the latest updates on global politics.